Now we are proceeding to 3.1.2. Prepare the retained income note on 30 June 2015. Okay. All right. By now, I'm sure most of you know anyway the format for the retained income. We start with the balance at the beginning. We add the net profit after tax. We remove the repurchase. We remove the dividends, and then we get the balance at the end. Okay. But anyway, let's find out what is it that we are already given. So if you look at the answer book that is given here, the balance at the beginning of the year is already given. It is the same balance that is written here, retained income 1 July 2014. Okay. After the opening balance, what do we record? The net profit after tax. Where are we going to get the net profit after tax? From 3.1.1, we calculate the correct net profit after tax, and it is 1,750,000. So let me write that net profit after tax. Net profit after tax, it's 1,750,000. 1,750,000. Okay. And then after the net profit after tax, we are going to record our repurchase. Okay. Okay. Repurchase. The repurchase is indicated on C in the table that is given on 3, share capital. They are saying that 20,000 shares, 21 May 2015, 20,000 shares were repurchased at R2.50 each from an existing shareholder. The amount that was received is 50,000. This has not been recorded. Okay, it's fine. Okay, remember what I said last time when we were looking at a repurchase? I want you to watch me closely how we calculate a repurchase. Okay, the repurchase affects these 3 things. It will affect the bank, it affects the ordinary share capital, it affects the retained income. Okay, already we are given there, okay, fine, the amount for the bank, which is the R2.50. This is the amount that was spent for the repurchase, which gave us the 50,000. So the bank account will be affected by the R2.50. Okay, let me write it properly. Okay, by R2.50. Okay, and then the ordinary share capital will be affected by the average share price, and then the retained income will be affected by the bank minus average share price. Okay, let's calculate those and find out exactly how much are we going to have for the ordinary share capital with the average share price. How do we get the average share price? We look at the number of shares that are available before the repurchase and the ordinary share capital that is available before the repurchase. We divide them so that we can be able to get the amount per share. So if you look at 1 July 2014, we were having 3 million shares at 3.9 million. We also had in August, new shares were issued, and then there were a million at 1.7 million. Okay, so remember what I said? We are going to start by saying the ordinary share capital divided by the number of shares. Okay, so our ordinary share capital is made up of 3.9 million plus 1.7 million divided by the number of shares. We have got how many shares at the beginning? 3 million plus 1 million shares. So when we divide this, we are actually going to get our average share price. Okay, so let me just simplify it. So 3.9 plus 1.7 is going to be something like 5.6 million divided by the number of shares. It's 3 plus 1 is 4 million. Okay, when we divide, we are going to get something like, let me check on my calculator, how much are we going to get? We are going to remain with 1. So R1.40 is indicating our what? Our average share price. So we can safely write here R1.40. Okay, so how much is our retained income? We are going to say R2.50 minus R1.40, which will give us something like R1.40. 10 cents. So this is our retained income. Okay. So now when you go into the repurchase, of shares, okay, let's go back to the note, to the template, 3.1.2. okay, repurchase of shares at how much? 1 rand 10 cents. Okay, so in other words, we are going to say 1 rand 10 cents multiplied by, okay, you multiply this by the number of shares that were repurchased. How many shares were repurchased? There were 20,000 shares times 20,000 shares, which is going to give you something like, on the answer book, you'll be having 22,000 for the, and it's going to be in brackets. Okay, remember, it is reducing our profits. Now let's go now to the dividends. Okay, if you look at the answer book, we've got dividends. Okay, the dividends are two. We have got the dividend that is paid during the year, usually after every 6 months. Okay, that can be declared by and paid by the directors. We call it an interim dividend. So we're going to look for an interim dividend. An interim dividend is a paid dividend. And then the last dividend that we record here, it is called the final dividend. The final dividend, it is a declared dividend. It is a declared dividend. Okay, fine. Let's go on to adjustment number C. Dividends and shares. Interim dividend is given. Is it straightforward? 600,000. Okay, so we record the 600,000 for interim dividend. And then the final dividend. What is it that they are saying about the final dividend? The directors declared a final dividend of 22 cents per share on 30 June 2015 on all the shares issued to date. Shares repurchased on 31 May 2015 do not qualify for the final dividend. So in other words, we are supposed to subtract the repurchased shares from the shares that were available. We know that we had 3 million shares, we had 1 million shares. So in other words, we are saying 3 million plus 1 million minus the 20,000 shares. Okay, let me just show it. Here's a calculation. We are saying 3 million shares minus plus 1 million shares minus 20,000 that were repurchased. Will remain with something like 3,980,000. 3,980,000 shares. Okay, so 3,980,000 shares are the ones that are entitled to the final dividend of 22 cents. So we are going to multiply 3,980,000 multiplied by 20. What is the final dividend that was given there? It is 22 cents per share times 22 cents. 22 cents is like this. Okay, so when you multiply 3,980,000 times 22 cents, we are going to get something like 875,600. 875,600. Okay, so now we say the interim dividend plus the final dividend, it will give us the total amount for the dividends. Let's go to our calculators. It becomes 1,475,600. Also in brackets, remember the dividends again, they also reduce our profits. Okay, so the last thing that we are doing now is to say the balance at the beginning plus the net profit after tax minus the repurchase minus the dividends. We get the balance at the end of the year, or the amount that we are going to record in our balance sheet, which is 2,952,400. This is the amount that we take to our balance sheet. Okay, we are done with 3.1.2. Thank you.